What if you could see what the market's betting on before it happens? Well, today we're diving into millions of dollars in prediction market data to see exactly where the smartest money is flowing right now. 65%. Right now, that's the probability traders are giving to the Federal Reserve cutting interest rates this December. Now, why does that single number matter so much? Because a rate cut is the market's way of screaming that an economic slowdown is coming. And this isn't just chatter. The stakes are absolutely massive. We're talking nearly $13 million wagered on this one decision alone. Traders are betting real money that the Fed's hand will be forced, that they'll have no choice but to pivot. But here is where it gets really interesting. This is a central puzzle we're going to unpack. At the exact same time traders are betting on a slowdown, the market is pricing in a 96% chance that gold, the ultimate safe haven asset, will outperform Bitcoin. And yet, there's a separate, almost $15 million bet that Bitcoin will surge to $150,000. So, what is really going on here? To make sense of these signals, we need to break it down. First, we'll find the single biggest bet that's driving everything. Then, we'll solve that gold versus crypto paradox. After that, we'll look at a really clever high-leverage bet. And finally, we'll pull it all together into one clear macro picture. So, where is the most money flowing? You'd probably guess it's in economics or some big tech stock, right? Wrong. The data shows the dominant wager, by a long shot, is in long-term politics. Get this, over $28 million. That's how much money is sitting on a contract for the 2028 Democratic presidential nomination. Now, to put that in perspective, that's more than double the amount bet on the Fed's next critical move. This tells you everything you need to know about where the market's head is at. Traders aren't just thinking about the next few months. They are pricing in major political uncertainty years down the road. The sheer size of this bet signals that long-term political shifts are seen as the single biggest driver of future volatility. Okay, now let's get back to that paradox we opened with. How can the market be betting on safety and extreme speculation at the very same time? Well, the answer is all about timing. It's two completely different strategies for two different time horizons. So, on one hand, you have this 96% probability that gold is going to outperform Bitcoin. This is a classic short-term defensive move because traders see a Fed pivot coming, they're also expecting some economic turbulence, and that almost always sparks a flight to safety. Gold is that safety. This means that massive $14.8 million bet on Bitcoin hitting 150K, that's not about what happens tomorrow or next week. It's a long-term, highly speculative play. These traders are positioning for the result of the Fed's pivot, betting that once the central bank turns the money printer back on, it's going to ignite the next major bull run for high-risk assets like crypto.
Okay, so beyond these huge primary bets, you'll often see smart money placing smaller, high-leverage wagers. You can think of it like buying cheap insurance against something that probably won't happen, but would be a huge deal if it did.
And this contract is a perfect example. The market is pricing the odds of Donald Trump eliminating the Department of Education at just 3%. So super unlikely, right? But imagine the political and economic shockwaves if it actually happened. It would be massive. And here's why it's so clever. A correct yes bet here turns every $100 into over $1,800. So let me be clear, this is not a prediction. It's an incredibly cheap way to buy protection for your portfolio against major unexpected disruption. It's financial insurance, plain and simple. So what happens when we piece all this data together? The big political bets, that crypto paradox, the outlier hedges. What's the big picture? Well, a really clear two-part strategy starts to emerge. It's pretty clear the markets are bracing for an economic slowdown, with that 65% chance of a Fed rate cut. So the short-term play is a flight to safety. That's the gold bet. But the long-term play is all about betting on volatility and huge upside, positioning for massive political shifts and the next crypto bull market. In other words, it's a strategy of short-term caution but long-term aggression. And all of this leaves us with one final, crucial question. In a market that is simultaneously preparing for a crash while betting on a moonshot, where do you think the real opportunity is hiding?